Well, good afternoon, financial professionals. My name is Jennifer Nadeau, case design specialist here at E4 Insurance Services, welcoming you to the brew, building relationships every week. We are very happy to have you on today, and thank you for tuning in. For those of you joining the Brewcast for the first time today, we like to start the Brewcast by celebrating what today's National Day is. And I'll say it again, I said it last week because it's the month of January, and January is National Financial Wellness Month. So we're in week 2 of that. And other exciting national days, it's National Arkansas Day. It's also National Milk Day. And last but not least, a lot of fun, it's National Step in a Puddle and Splash Day. I'll say here in the Northeast, it's nice and sunny, so I'm happy there's no puddles to splash in, but I think California probably has a lot of them to splash in. On today's brew, we welcome advanced underwriting consultants Linas Sudiuz. Linas will share with attendees how to use the income tax return to better serve clients by reviewing key information contained in Form 1040 and its schedules, using relevant client data to identify key topics requiring attention and to help clients start to plan to minimize future income tax liability. As always, please feel free to use the chat box throughout our time today to share your thoughts or ask questions. Also, all attendees are in a drawing for a prize, and we will announce the winner at the end of the call. Thank you again for tuning in. And Linas, good afternoon. So happy to have you.
Jennifer, it's a pleasure to be here with you today and with all the attendees.
Wonderful. Let's jump into it as always and start with that 1040 form that we're all very familiar with, but utilizing it as an information source or even a conversation starter to learn more about our client's financial situation is a bit intriguing to me. And I will admit that I've watched your YouTube videos and of course have looked at your materials as well. I know that you start out right at the top with deriving information even from the label section or the filing status. And when I was first learning about this, I would have skipped over that part. So let's start there. How is this information relevant in the fact-finding process in general?
Well, you're not alone, Jennifer. A lot of us do, right? We're in a fast-paced society, and a lot of times I think we don't study information as well as we might. But there's no great mystery from my perspective about what kind of information can be harvested from the label portion of the 1040. It starts with the client's address, right? Mm-hmm. And I think the follow-up question to a client is, I see you live here. How long have you lived there, right? Because that opens up the possibility that the client may have a primary residence that they've lived in for a long time, may have recently moved, in the low interest rate market that we just passed. A lot of people were buying and selling properties, and so that certainly is something that ought to be thought about. Is client renting as opposed to owning a home, right? It just starts all of those conversations when you start with asking about address. Another piece of information that's particularly relevant on the form is the client married? Is this a joint return? Is it married filing separately? If the client is married, it implies a lot of questions that will be relevant about things like potential deductible IRA contributions, right? If either spouse is an active participant in a pension plan, you'll want to know that. And their ability to make a deductible traditional IRA contribution may be affected by that participation. Is the client a candidate for making a Roth IRA contribution? Well, the joint income levels become relevant, and knowing those details really become relevant. If is the client of an age where estate taxes or estate planning are important? Well, if the client's married, all of a sudden the marital deduction becomes something that needs to be thought about, needs to be considered as part of the whole process. So all of those things are things that start to get thought about and generate potential follow-up questions on the part of the financial professional who's helping the client. The Social Security number questions are interesting as well, because if the client's filling that in, the question is, well, why do we even have Social Security numbers? Well, for a lot of people, it has to do with tracking their retirement benefit, right? Social Security deposits are made for people as they're working. Hopefully they're able to get some kind of benefits, retirement benefits, when they reach a certain age. And it starts the thought process and the question process about whether there's adequate retirement savings, particularly for those of our clients who are in their 50s or older. And so that kind of triggers that. If we've got people who are older than 65, retirement planning ends up being particularly relevant, and making choices about where to pull retirement income from. I mean, it's all part of the discussion to help serve our clients better. But those are the kinds of extra things that, if you think about it for about
Right off the
5
top.
minutes, right? Yeah, if you think about it for about 5 minutes, you figure out you can get started with from the information from the top. But if you're in a hurry, you might miss them.
Right, exactly. No, we appreciate that. And of course, when I was first learning about you, I immediately thought about the income section and the schedules. And I will skip over to that so we can bring up that area. But can you speak to that? Loads of content there, probably loads of information that you can get information from.
Well, it goes back to what I said a little bit earlier. Now, what age of a client do we have? Which stage of life are they in? If they're close to retirement and they're still earning a wage, the question is, have they saved enough for retirement, right? How much retirement savings can their income support? If they've got earned income, they're candidates to make IRA contributions or Roth IRA contributions. Have they already done that? Are they taking advantage of that? If they're working, do they have adequate disability coverage, right? All of those things are things that get triggered by the wages number. And if we've got husband and wife working, having the details about, what wages both husband and wife are getting help to trigger whether, life insurance is adequate on either one of the spouses. Are they adequately protected in the event something happens during the working years? I love 2B and line 3 here on the form. These indicate, the types of investments that the clients may already have that may be generating an income tax result for a client. Well, for those of us who are heavily in the life insurance business, we understand that sinking money into a life insurance policy or into an annuity product will allow us to better control the timing of the income tax result associated with investment earnings, right? Dividends, savings account interest, well, they're taxable now. Whereas if a client decides to put money into a tax deferred or other tax advantaged investment, they can put off the day of tax reckoning. And so if there are sizable amounts there in 2B or 3B, it's an opportunity to talk about those types of things. if there have been IRA distributions in the past, if there have been pension distributions in the past that show up on the income tax return, it's an opportunity to engage the client so that we understand why those distributions were made. Are those minimum distributions? Because the client's now older than 73, thanks to the newest change. Are they distributions that were made voluntarily? Does the client understand that distributions from pension accounts can be the most expensive the money that the client accesses for various things, right? So those discussions can be had based on what it is that we're seeing in those fields.
Mhm.
Is the client a candidate for doing rollovers? Is the client a candidate for doing a Roth conversion so that future distributions come from, say, a more tax-advantaged account like a Roth IRA? All of those things are relevant. One of the things that we'll also get generally as part of the Form 1040 is we'll get a copy of the client's W-2, which might indicate whether the client's a participant in a pension plan. And that's good to know, right? If the client's a participant in a pension plan, because it, first of all, tells us that they're candidates, they're already saving for retirement, and the question comes, is it enough? Do we need to consider other things
Right.
for them to invest in? Go ahead, Jennifer.
Exactly. No, great information. We also, and I just want to mention to everyone too, this full presentation, and Linus has a great talk that he does, and we'll be sharing his YouTube channel towards the end of the call today, so that you can watch that and see some of the other information he has out there. I just want to mention that as I kind of skip through these slides, but you also talk about utilizing the schedules, the different schedules, as well as a source of information. And if you could talk to us a little bit about that, that would be terrific.
Sure. So, there are two schedules that I think are particularly important if the client has them as part of the package of tax forms. Schedule A is the form for itemizing deductions. These days, after the Tax Cut and Jobs Act of 2017, a lot of our clients just take the standard deduction, and they don't itemize anymore. But there are still a significant minority or significant percentage of our clients that do itemize. And for those clients that do itemize, being able to engage with them about things like itemized charitable deductions, things like high health insurance costs that they may have or expect to incur over the course of the coming year. I think those are important things to have. If they're participants in high deductible healthcare plans, and in the past perhaps have taken medical expense deductions, but this year maybe won't have as high of expenses, it's an opportunity to think out loud with them about things like health savings accounts.
Mhm.
Are they paying a lot in mortgage interest? Are they paying a lot in real estate taxes? Is refinancing a sensible financial thing for them to consider that would potentially free up more money for them so that they can take care of other financial needs? All of those things are things that can be harvested from Schedule A. And if the client has a Schedule A, those are all reasonable conversations to have. The other schedule that I think is particularly important is Schedule C, which is sole proprietorship business income report. If we've got somebody who is a sole proprietor or who is otherwise an owner of a closely held business, there are tremendous opportunities to talk to them about things like the pass-through business deduction, if it's available, up to 20% of deduction on business income in certain circumstances. We want to make sure that they're taking advantage of that if it's available to them. Things like sponsoring pension plans inside of their business, is if they're candidates for that, if they have a limited number of employees and a pension plan would allow tax favored money to be put aside for the owner of the company, it's fair to engage in that conversation as part of the Schedule C or a K1 that they might have gotten as part of a participation in a partnership. Health insurance, is that being paid for by the business? Those are reasonable things to ask about. If they're candidates for long-term care coverage, is it something that they're willing to interested in providing from their business? Tax advantages for the business owner to provide those kinds of things out of the business organization. And so from my perspective, Schedule C is like getting a Schedule C in the packet if we don't know about it in advance is like having a winning lottery ticket, right? Because it opens up so much, opens up a lot of conversations, including non-tax conversations about business continuation plans with the owner of the company.
Yeah, and as you were speaking and I was listening to you, I was thinking that the review of this can open up just endless conversations and opportunity that may be being overlooked. Before we open it up to questions, I would like to ask you just to comment on one more thing. And we talked about reviewing the schedules and the tax return in general, but you also speak to this about an excellent way to open up conversations for future tax year management as well. So I'd love it if we could close it out with that before we open it up.
Yeah, Jennifer, thank you for that. I've touched on a bunch of ways that the return information can help the clients predict their future tax liabilities. Look, taxation to a large extent is a choice. Our clients have the ability to choose to some extent how much tax they will pay based on the types of investments that they make, the types of financial commitments that they make. And so reviewing the return is a way for a financial professional to help the client think about those choices consciously and to make certain kinds of choices so that in the future, the income tax exposure that the client is almost inevitably going to be ticked about is lower in the future than it is today. So CPAs aren't great at helping clients predict the future on taxes. I don't mean to denigrate my CPA friends, but in my experience, in most cases, they're helping a client record history rather than helping a client to be proactive about what happens in the future. And so as financial professionals, we're better situated to help clients predict the future. And the information on the income tax return is really the source of a lot of the beginning information so that we can have full conversations with our clients about how to serve them best in the way that they want to be served.
Excellent. Thank you so much. We'll take a couple of minutes now and open it up for questions. And I just wanted to mention again, we will get your link to YouTube up in the chat box there for everyone to be able to access to your information. While we're waiting to see if there's any final questions, I'd like to remind everyone that today's brew and our full library are recorded and shared on the Brew blog on our website at www.e4.insurance. And let's do our drawing as well. Linas, if you would do us the honors and pick a number between 1 and 25.
Are you ready?
I'm ready.
22.
22, lucky number 22. Oh, Kevin, I'm going to say your last name wrong. I know it. Kevin G. Amalva. I'm so sorry if I'm butchering that. Congratulations. Please be on the lookout for a complimentary CE voucher and Starbucks gift card that will be coming your way from all of us here at E4 Insurance Services. Congratulations, Kevin. And I am going to pop into the chat box. Thank you. I see that your the link was just posted. We do have a question, and let's just see here. Where do we find the add back for life insurance premiums that are paid from a business that can't be deducted?
Uh, I'm not sure exactly what the question is. Yeah, I mean, I'm with you. The premium for business-owned life insurance is not tax deductible, so I'm not sure when you say add back. I'm not sure what you're referring to, what kind of business you're referring to, but feel welcome to email me after this session. I'll be glad to engage in a fuller conversation there. It sounds like it might be a little bit deep to get all the details that are being thought about.
Okay, thank you. And I have another question. Oh, I like this one. What memorable case can you recall coming from a tax return review? Put you on the spot, Linus. Memorable case.
There are plenty. Some of the ones that are recent are some of the ones regarding captive insurance companies, and the IRS having it pretty much all its own way in a series of cases up until the most recent go round. But the cases where the taxpayer lost on captive insurance companies related to life insurance, the taxpayer tried to chase after a tax deduction related to the life insurance policies by using captives as kind of a straw man in order to achieve that result. And the IRS saw through it. So, those are the ones that come to mind from most recently.
Excellent. I see Dan popped on there. Hi, Dan.
Well, I just wanted to thank Linus. We've enjoyed a long relationship together, dating back to when each of us were in home offices before Linus started his practice of in consulting. And we're privileged through a relationship that we have with one of our carriers, North American, that Linus has basically kept on retainer for us to answer questions and to provide insights for our advisors on cases that we're working on. And so it brings a really good independent view from a tax attorney and who really knows his craft and helps us really position cases with advisors. So keep that in mind as we go forward, that he's a great resource for us here at E4.
Thank you, Dan. I appreciate my relationship with you and with E4 as well.
And we definitely appreciate you too, Linus, and the support. I am not seeing any other questions in the chat box. So thank you again. And we will wrap it up for today. Appreciate you having you on, Linus.
My pleasure.
Tune in next week as we welcome E4 Insurance Services' very own Regional Vice President, Mike Pinkins. Next week's Brewcast, Mike will share with attendees how to present and close your next long-term care sale. So we're looking forward to hearing what Mike has to say. Thank you, everyone, for tuning in. Congratulations, Kevin. And we will see you next week on The Brew. Have a great week, everyone.